And hello, look what it is. Yes, it is. It's my Dunkin' Donuts coffee. And this is only my first cup. It's still early. I need a couple of more before the morning gets started. Anyway, my name is Kenny Polcari. I am your host of the party. And today is Friday, May 6th, 2022. And oh my God, you got to get up with a headache this morning, right? What you need to know. So stocks go up and then they can go down. And when they go down, sometimes they go down hard. Investors are clearly not buying what JJ is trying to sell. Oil pushes higher, but why is anybody surprised? And shelter in the storm, right? Investors should look for earnings growth versus multiple expansion in this environment. And what do we have for dinner today? Well, it is angry out there. People are angry, so I'm giving you again the Spaghetti Arabiatta, which is angry spaghetti, but we'll get to that in a minute. It takes you 30 minutes to make it. It's great. So, boy, do I need an Excedrin this morning. It was a brutal day. Or was it? I mean, stocks rallied hard on Wednesday, and then they sold off on Thursday. They were up 935 points on Wednesday, and then they were down 1,060 points on Thursday. So in reality, we sold off 70 points from where we were. So what's the panic? Well, not so fast. I guess investors and traders and algos were not so impressed with what JJ had to say. I guess when they got a chance to dissect the statement and all of his comments, the answer was, not so fast, buddy. This is not the bed of roses that you suggest it is. And that 75 basis point non-rate hike that you told us about, along with I don't see a recession story, isn't what we think is true. You had us on day one, but then we pulled it all apart, listened again to your speech and your comments, and decided that we think you and your whole team has lost control of the narrative and of interest rates. And yes, it was an ugly day right from the start. Small pullback would have been expected after the red hot rally on Wednesday, but yesterday's action was anything but a small pullback. And the sense now is that there's more downside to come. How far? Who knows? I guess it depends on what the Fed does and says next, right? Because the markets are going to react to what it hears and then what it thinks. Stocks came under pressure the moment the opening bell rang yesterday and continued to melt down as the clock ticked. By the end of the day, the Dow gave back 1,063 points or 3%. The S&P choked, giving up 153 points or 3.5%. The NASDAQ got absolutely creamed, losing 650 points or 5%. The Russell gave back 80 points or 4%, while the transports gave up 450 points or just under 3%. Now, to be clear, while it was an ugly day yesterday, the broader market and the Dow remain in correction territory. Down more than 10%, but less than 20%. The NASDAQ and Russell are both well into bear market territory, both down 24% off their highs in late 2021. And probably have a bit more to go, right? As we know, the individual high-growth sexy names are down even more. Cathie Woods' ARK, Disruptive Tech ETF, is off 50% this year, and it's off 65% from the all-time high back in July. Names in that ETF include Teladoc, down 88%, Roku, down 80%, Zoom, down 75%, Coinbase, down 70%, Twilio, down 72%, and how can we forget Robinhood, down 90%? The winner in this fund is Tesla. It's only down 31% from its high of November 4th. From a broader perspective of the 11 S&P sectors, communications, consumer discretionary are tied for first place, down 21% year to date, followed by tech down 18%, real estate down 12%, financials down 10%, industrials down 9%, healthcare down 7.5%, basic materials down 5.5%, consumer staples less than 1%, utilities are up less than 1%, and energy is the clear winner, up 45%. Most individual subsectors are also down. So while it feels like there's no place to hide, that is not exactly true. There are pockets of strength, and we've seen it. Energy, staples, coal, fertilizer, big tech, utilities, and aerospace and defense. Names that you know. They are the big, boring, and beautiful names that I've been talking about. ExxonMobil, Chevron, Halliburton, Oxy, Peabody Energy, Lockheed Martin, Northrop Grumman, Raytheon, General Dynamics, Johnson, Coke, Walmart, Procter & Gamble, IBM, Southern Companies, Duke, and AEP. Do you see the pattern? These are not the Kathy Woods names. These are tried and true U.S. Americana names. I've highlighted them. I will remind you. In this environment, look for earnings growth and not multiple expansion, because in a rising rate environment, multiple expansion is going to be hard to come by, especially for those sexy names. It is what I have been saying for months now, value over growth. And speaking of, the value trade, SPYV, is down 4.7% this year, while the SPYG is off 21%. Don't forget, you also get paid to own value in the form of decent divvies that can be automatically reinvested in what is known as DRIP programs, dividend reinvestment plans, which helps you to build your position in names that you like and names that will provide some stability. 10-year Treasury prices dove, sending yields all the way up to 3.1% yesterday at one point, only to close yielding 3.03. And that finally made some sense, considering that the Fed is about to embark on a historical rate increase cycle. The idea that bond analysts were trying to explain it away by saying that the bond market had gotten ahead of itself, and the idea that the Fed is not actively considering 75 basis points has to make you laugh. Yesterday, I thought that we wouldn't be having the 75 basis rate increase conversation until next week, but I guess I was wrong, because we're having it just hours after JJ told us to put it to bed. Now look, this morning U.S. futures are down, which should be no surprise. It's Friday going into a weekend. It's been a tough week. Dow futures down 45, S&P's down 10, NASDAQ down 50, the Russell's flat. We are due to get the monthly non-farm payroll report today. And while the expectation is for an increase of 380,000 jobs and for unemployment to go to 3.5%, I am not making any investment decisions based on this report. Now, could we see a big upset in either direction? Of course we could. Is it going to make a difference? Absolutely not. Not right now. It's going to make no difference at all. I mean, look, the focus is going to remain on now the speculation about what happens if they raise rates by 75 basis points, which is now what Fed funds are pricing in. See how fast that happened? 2 days ago they weren't, now they are. This after JJ told us that they were not even actively considering it. What happens if they make an intra-meeting move, which is not unheard of? Think of the message that would send. I mean, remember what I said on Tuesday. It's about the combination of rate policy that includes not only the rate, but now the pace of those increases and the implementation, of those increases. Expect lots of chatter today as analysts and strategists dissect everything that has happened in the last 3 days. In the end, it is now even clearer that investors think that the Fed has lost control of the narrative and that they think rates will rise faster than JJ is telling us. That inflation is not expected to subside anytime soon, and that we should brace for a hard landing, i.e. recession. Next up, expect all of the Fed members to start to make the rounds on TV and industry conferences. Expect them to continue to tell us, don't worry, we got it. Yeah, it's a little bit uncomfortable, but we have control. I don't think so. European markets are all lower this morning. Monetary policy remains the key focus. Global bond yields are all up as investors react to rate hikes and expected rate hikes. Bank of Finland's Olli Rehn demanding that the ECB move faster on rates, suggesting that the recent turbulence is all about the pervasive uncertainty around global monetary policy. And it is. It's always about the uncertainty. Markets across the region are now down more than 1%, 1.25%, like that. And guess what? Oil is up again, adding $2.45 to a barrel, coming in now at $110.65 a barrel. Remember when they tried to force oil lower with the SPR release, saying they got this? Oil did trade as low as $94 a barrel because they tried to create other conversation around China and demand destruction, which was baloney, right? And they were adding supply, so that was going to help it. Well, how'd that work out, right? It didn't really solve the problem. We have very strong demand, and we still have a supply issue that isn't going away anytime soon. So brace yourself for higher prices. The S&P closed last night at 4146, down 153 points, leaving 2 century marks in the dust, right? It closed at 4,300 on Wednesday, so we lost that, and it went sliced right through 4,200. The April low is 4,062. That's going to be the level to watch. A breach of that level will set the algos on fire and ignite a new round of sell orders. Buyers will not stand in the way, and why should they? It doesn't mean everyone's giving up. Not at all. It just means that the market is working and pricing in the risk. So wherever it takes us, it takes us. You have to decide where you are on this ride, right? What's your time horizon and what's your risk profile? And that's going to determine how you set up. Yesterday, I said that Wednesday's rally was a bit overdone. I think as we move through the month and see that the economic data is not in retreat and inflation is not in retreat, that the conversation once again turns to the pace of rate increases. I'm in the camp, and I have been, that the 75 basis point conversation is not over by any stretch. Unless, of course, the economy goes completely into reverse, which it just might, considering GDP came in at negative 1.4% last month. But Jay tells us, don't worry, we're not going into recession. Ignore the GDP report. We're strong enough to withstand this. The immediate level to watch, like I said, is 4062 on the S&P. A breach there could see the S&P make its way towards 3,800. And if you think there is value today, just wait until it gets to 3,800. Remember, it's about sentiment. In the end, you need to create a plan and stick to it. Emotions are not an investment strategy. Just remember that. Okay. So what are we having for dinner? So this is kind of a fan favorite, right? And it describes exactly where we are. Spaghetti Arabiatta is the Italian word for angry, right? This dish was created in Rome. The sauce is simple to make, and it gets angrier the more red chili pepper you add. You can serve this with any type of pasta, but really you want a long spaghetti linguine is the best pasta to serve with this dish. But do what you want. This dish should only cost you about $25 for a family of 4, and it takes you 30 minutes to make, right? So it's not expensive to feed your family, and it doesn't take you all night long in the kitchen. So for this, you need olive oil, onions, garlic, red wine, sugar, crushed red pepper, or chili peppers if you want it hot, hot, hot. You need some fresh lemon juice, oregano, salt and pepper, crushed tomatoes, tomato paste, and chopped parsley. You want to bring a pot of salted water to a rolling boil on the back burner just so it's all ready. So while that's heating up, you want to take in a large saute pan, put it up on medium high, add the olive oil, and then toss in the garlic. Saute it a bit, don't burn it, 3-4 minutes. Now you're going to add in your sliced onions and saute those until they're soft. 5 to 8 minutes. You know what? You know the drill, right? Now you're going to add in a half a cup of red wine, a half a tablespoon of sugar, fresh squeezed lemon juice, about 1 tablespoon, oregano, a bit of tomato paste, and a 28-ounce can of kitchen-ready crushed tomatoes. Not puree, just kitchen-ready crushed. You want to put the crushed red pepper or the chili pepper if you prefer, bring it to a boil, then reduce it to simmer and cook it for 15 or 20 minutes, right? Covered. Nice and low, slow. Now you're going to add the spaghetti to the boiling water. You're going to cook it for 8 minutes or so until it's al dente. Then you're going to strain it. Remember, always reserving a mug full of pasta water to add it back, just to re-moisten the pasta, right? Now add the pasta back put the strained pasta right back in the saute pan with the sauce. Toss it well. Take a handful of grated Parmigiana cheese, toss it in there. Toss it, serve it well. If it looks like it needs a little bit of water, add a little bit of water to moisten it, but don't make it like wet, right? You just want it to be moist. When you serve this in warm bowls and have a nice bottle of Brunello di Montalcino. That wine goes great with this dish, right? Yeah, it's a heavier wine, and this dish isn't meat, but that wine goes really great with this dish. And you always, always, always want to have extra cheese on your table for your guests because you can never have enough fresh grated Parmigiana. I mean, come on, tell me the truth. In any event, It is just about 7:30 this morning. The day is young. It's going to be another very interesting day. And don't forget, it is Friday going into the weekend. If we see some weakness today, should not be a surprise at all. Until Monday, take good care.